Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Thursday, the 29th of February, last day of the month. Thursday, the 29th of February, leap day. Leap day? Is it leap day? Is that what you call it? Leap day? I don't know. But it's Thursday, the 29th today. Don't get many of them, one in every 4 years. So welcome to the Bull versus Bear webinar. Steve Miley on the call here for Trade Day. Welcome. We're going to go for our usual regular run through in here today. Calendar, what we've had, what we've got coming up, what's important from a macroeconomic, from a data central bank, from a geopolitical standpoint, what's affecting in financial markets right here, right now. We'll take a look at some articles from the major news wires. We'll take a look at what's going on on the charts as well. So let's start off with the calendar. So just jumping back to yesterday, US GDP number. Now, even though GDP number, you think it's like a super important number, they have it 3 bulls in here. GDP, gross domestic product is what a lot of people look at, right? This is very backward. Even though this is preliminary data, well, this is preliminary data still for and revised data for Q4 of last year. So it's very backward looking. So it rarely has an impact on financial markets in the very short term, unless it's very much out of line. And we can see in here the headline number, the quarter-on-quarter number, was 1/10 lower than expected. So not really a big deal in here. So markets not really reacting to that. I don't want to, beat my own drum, but, we pretty much nailed it at the beginning of the week. Monday's webinar, I said, this is where we look at the shape of the week, right? On Mondays, I know I bleat on about it and people are probably thinking, why is Steve going over all the stuff in the week? I'm day trading. I only need to know what goes on today. Well, you know what? Because we looked at the shape of the week, because we knew that the major data was coming today and tomorrow. What do we have today? PCE, personal consumption expenditure. We've also got European inflation data today as well. Plus then tomorrow we get the PMI, the official PMI data from so we had the preliminary flash number last week from S&P Global. And we get the proper data tomorrow. We'll focus on that obviously tomorrow. But we've got the PMI data and also from the ISM tomorrow as well, from the Institute of Supply Management. So we've got that tomorrow. So the bigger data for the week was coming up in the last part of the week. Plus we'd had this strong rally that's been going on since October and then accelerating through this year and then accelerated higher last week because of NVIDIA. So all of that, the market was kind of tired, a bit exhausted. And we spoke about it being a mean reversion start to the week. Mean reversion, consolidation, range, chop trading, whatever you want to talk, how you want to talk about it, right? But the market's taking a breath, taking a breather, and it's exactly what the market's delivered. You only need to go and jump on the chart. Here we are, like this chopping kind of side. That's NVIDIA back over here, driving us higher last week. And although that kind of looks like it's in a downtrend, it's kind of been choppy. It's been kind of choppy sideways, slightly down. Obviously, that's the Nasdaq, and similar story with the S&P, really. But it's been up and down, up and down. This has not been trending. Not like this. Boom, 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 right? Or not like if we go back, on the bigger chart, go jump onto the ES again, there's that trend, right? It's not been like that. It's been a downwards consolidation pattern in here. And we kind of nailed that, right? Nailed that. And then you can adjust for the week, right? You can adjust for the week, because if you think that's what's going to be coming up, then what do you do? Well, one, you maybe think, well, okay, I'm going to be maybe more range trading this week. Also, maybe you don't trade very well in a range, so maybe you're more cautious, you're more patient. Oh, here Stephanie's in the chat there. Look, your Monday update really did help me be patient with the equity indices being really range bound. Well, there you go, right? Thank you, Stephanie. So this is really important to do this kind of extra little bit of due diligence. People say, why am I interested? I'm a technical trader. I know you're technical traders. I'm a technical analyst. I've been doing this for over 30 years, right? I've been looking at charts. That's what I do. But I still know what the macros are, because they can shape the markets. Okay, they certainly do shape the markets, and so it gives us an idea of what might be happening. Okay, and what could be happening, and that's exactly what's happened. Kind of as we kind of like nailed it on Monday, right? The market's been in a choppy range, and then it might also means that you're not looking for as big a move, so you might adjust your targets. You might have smaller targets. You might then tie to stops because you've got smaller targets, etc., etc. Okay, I feel like I'm preaching now, so I'm going to shut up. Right, so data is important. Now we do have some important data. We've already had some data, so that's looking back. That GDP data, even though it grabs the headlines, it's not really a big piece of data in a lot of ways on the trading perspective. It's important economically, but not on a trading perspective. We've had a load of European data out in here this morning. French GDP is backward looking. French inflation data slightly higher than expected, so that's a negative, remember. But importantly, you can't actually see it on. Oh no, it is in here. It's populated now. I've switched. Okay, so we've had all this data in here. These are all in black because we don't have prediction data. But I can tell you, all of this data is the state data. Now, in very shortly, in 24 minutes, we get the final data in here. Now, this is almost irrelevant now because we've had all the state data, so you can basically calculate approximately what the German as a nation data is. It's not going to be exactly, but from that state data. But what we have in here is the official German national data is coming out in 24 minutes. But the state data, I can tell you, has been, even though this is in black because we don't have. So it's not beat or miss because we don't have forecast data. There's no data in the forecast column. But I can tell you that the data was better than expected. Okay, so that's been positive for the German market in here today. Okay, so that's definitely a little bit of a positive. Remember, it's a global economy, right? We're looking at in here. If we're seeing maybe some slowdown in Germany, it could be that we're seeing slowdowns elsewhere, potentially in the US as well. So that's maybe pointing us to, even though we did have an uptick in here, worse than expected, higher than expected in France, and the German data so far. There's a couple of articles on that which I'll share with you shortly. So the German data, we get the official final national data in here in 23 minutes now. Then after that, in 53 minutes time, we get the core PCE price index. Okay, this is the key data in here, this month on month, year on year core PCE price index. What is it? Personal consumption expenditure. Why is it important? The Fed tell us it's their preferred measure of inflation. Yes, the CPI data is important. Yes, the market moves more on the CPI data, but this is what the Fed watch. So people watch this, it moves the market. So get ready for that. 52 minutes. This is kind of what we've been waiting for in the week. I'm not guaranteeing we're going to get explosive moves. If the market comes in, if it comes in dead in line with expected, the market's probably not going to move much. I think there is a bit of some fears in the market that it could be higher than expected. If it's higher, then it's probably going to, I think the actual article I've got is that put a nail in the coffin of any hopes of a rate cut from the Fed before the summer. But we will see. If we get better data, it could mean that we get more of a chance of a rate cut into the summer. And then we'll see probably stock indices go to the upside. So it's important to be monitoring that data going into today. We also have some Fed speakers through the day. Goolsby speaking here at 11. Mester then at 13:15. These are all Eastern time, okay? And Goolsby again, actually, it's 1700. And then Williams late tonight in here, 10 past 8. Okay, and then we got run into the manufacturing PMI data. This is we're getting global data, so it kicks off with China. You'll get that very late in the after session in here from China. So, and that's important, that China PMI, particularly with China, the Chinese economy doing particularly badly. So keeping an eye on that on the overnights as well. And then I'm going to just quickly jump to tomorrow, and you'll see that we get all the global PMI data coming through tomorrow. So here we have, where is it? Here we have France, Germany, Eurozone, UK, manufacturing PMI. Then we get it also from S&P Global, 9:45 tomorrow. And then definitely the more important data is the ISM manufacturing PMI data at 10 o'clock tomorrow. But so we've got 2 days of significant data. It could even lend us to, I'm bullish. The underlying view is bullish. We had that big push higher. We're in a bigger bull trend, right? I mean, don't think anyone could deny that's not an uptrend, right? Not only is an uptrend going all the way back to October in here, we've got then this kind of newer leg that came in 2024, having consolidated through here at the end of last year. So we've got this 2024 up leg, and then you got the sprint higher last week. Okay, so you got various legs of the bigger uptrend in here, all pointing the market still high. So I come at this with a bullish view. However, I'm not going to react differently if the PCE data today is pointing in the opposite direction. If we get inflationary figures, it's going to dampen any chance of a rate cut from the Fed, and then we're going to get it earlier rather than later, post into the summer, and then that will probably be stock indices go lower. So let's just run through in here. German stocks hit record high on easing inflation. So Germany doing well this morning because of and remember, it's not the official, the national data is not out yet, but this is the state data. Okay, look, in several of the countries economically important states, early reading showed inflation fell. Okay, so that's positive, and that's taken the German markets higher in here this morning. And another article on that, falling inflation inflation in German states points to national decline. We have that number in about now 20 minutes time, 19 minutes time now. Let's go to 5 things to start your day in here. So obviously focusing here on the US inflation data coming up from the PCE data. Bitcoin grabbing the headlines in here, up above $60,000. So grabbing the headlines in a bull run in here doesn't really impact. Does have a correlation with risk assets. Usually Bitcoin up equals risk assets, i.e. stocks up as well. But we're not really seeing that in here this morning with Bitcoin continuing higher. Fed speakers continuing to be cautious in here, dependent on incoming data. We've got some of that incoming data today, okay, and it said that was from but we get the various speakers that have already run through today, Bostic, Goolsby and Mester. What else do we have in here? So the US Statistical Agency showed the extra with an email to a group of data super users saying that a surge in a measure of rental inflation. Okay, I don't even know what that is. The information. Oh, potentially impacting onto inflation. So basically, rental data potentially impacting into onto inflation. So that's interesting. And US futures and bonds dipping slightly lower on the overnights. We'll take a look at those shortly. Fed officials more recently emphasized data to guide pace of interest rate cuts. Fed Williams says cuts won't be calendar based. Fed Williams says still a ways to go to reach the 2% inflation. And again, more from Williams sees more work needed to get inflation back to 2%. Remember, there is the Hawk Dove sheet in here that we have in here on trade day. So in here, if you go, it's on the public site. Actually, you should probably put this in there. I might go and pin this into the what's it called, into the members area somewhere. But this Hawk Dove sheet in here, and you can see the various, whether they're hawks are more hawkish or more dovish, and whether they're voters or not. Doves at the top in here, or hawks at the bottom. See, kind of Williams is kind of more in the middle. In fact, slightly on the dovish side. So they're fairly hawkish comments coming from Williams, given that Williams is more of is closer to being neutral to a dove. What's happening so far? Futures and bonds slightly lower in here. Focus all on inflation, as we know, and they're all similar. Wall Street slips with inflation data on deck. Futures ease, caution prevails ahead of it. All the same headlines: inflation, and then Bitcoin in there. Quick question. Hello, Steve. Is recent Nikkei value inflation adjusted when compared to the 1989 value? No, it's not inflation adjusted. It's just an absolute number. It's just an index. The indices are not inflation adjusted. So obviously it's a long way below where it should be. Yeah, I'm pretty sure that's the case. I'm not going to say I'm 100%, but I'm like way above 95%. Indexes don't inflation adjust. Yeah. So, they don't inflation adjust. So so the Nikkei's, they call them the lost decades, Stefano, right? It's been it was very, 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 you could argue, overvalued at one point, and it's taken a long time to get back to where it is, back to that 1989 levels. So what else do I have for you? I thought I'd do a little focus on this. So June, you're looking here. So just to talk you through I use this all the time, so you guys should be familiar with this. So we've got basically like 0% chance of a rate cut in March. We're currently at 525 to 550. You can see it in here, and 525 to 550, 99.5. So no rate cut expected in March. And then you click through May, pretty much no rate cut now expected in May. We were expecting, at the beginning of this year, and we'll look at it shortly. In the beginning of this year, if we go and take a look at the probability, now it's 0.5 of us being 500 to 525 in March. If I go and look at historical on this, 500 to 525, so we have to unclick all of these, which is really annoying. They don't have one button for that. But look in here. Back here, only at the beginning of January, the 12th of January, we were up at 76.9% chance that we'd have a rate cut in March. And now we're basically at 0. Yeah. So look how it's changed in that time. The Fed have talked us all the way back from that, yeah? And that's pretty much just, and then we had this big exuberance, this spike up was there's the anticipation. And then there was the big spike. That was the December meeting when they indicated they were going to pivot rates this year in 2024. So this is December 2023. But, the market in here going from, basically nailing on a rate cut to now no rate cut, okay? Now, if I go back to June in here, actually, let me go to the current, and then we'll switch it to June. And look where we are now in June. So May now, we're not really expecting any kind of rate cut. Look, 81% chance that rates are the same. And if we go to June now, Look where we are in June. So now we've only got so there's like 41% chance that rates are still unchanged in June. What was the chances in here? Let me go and take a look in here that we're going to be at a rate cut for June at 49.7% in here at the moment. If we go to the historicals for 500, 525, and I'm also going to go below that as well. Oops. So in here, look, 500 to 525 in here. You know, we were pretty much nailed on in here. Sorry, here's the 500 to 525 in here, right? Okay. But now look at the chances of we were going to be cut in here, but down to up. This is the level in here. We were 90% chance in here. Oh no, sorry, yeah, 90% chance up here that we were going to be 2 rate cuts by the June meeting. And now we've got very little chance of that happening in here, of us having that kind of rate cut in here by that meeting. So a big shift in here, a big shift. Now, my view is that we're going to see this shift back the other way now. I think the market has come very, very, very basic, all the way over to what the Fed have told us. Year end, the Fed have told us 3 rate cuts. What's the market pricing in there? 525 to 550, 3 rate cuts. Boom, we're right on it, okay? That's what the Fed have told us. There is a chance that the market starts to get ahead of itself as well, gets more excited. The market is prone to do that. It's exactly what we saw happen in December through January. The market got ahead of itself, and that allowed stocks to really push ahead. I think we've got real risk now. The market and the Fed are now aligned. I think there's real risk that the market gets ahead of itself again at some point going forward in here. So we'll have to see how that plays out. Let's have a quick nod to where we are on the indices around the world. So slightly lower, about a tenth lower to 0.2. The Nikkei and the Hang Seng. There's the German index up 0.5% in here. We said record highs. FTSE's up slightly. The French CAC with that worse than anticipated inflation rate, slightly lower. And if we take a look, we've been kind of marking time this week, as we said, sideways in here. We have dipped back lower in here on the overnights in here. So you can see we're 0.25% down on the NASDAQ and about the same on the S&P. So a slight dip lower, having had like kind of a dip and a rebound yesterday, but choppy sideways. Expecting markets now to be all focused on the data, and we're going to react to that. My view is I'm carrying a bullish view. I still think if we go to the charts in here, we looked at these yesterday. Look where we are, 38.2% retracement, right? Bang on it, okay? It needs to be pulled down slightly. There you go. So look, there's the 38.2% retracement of this is like the NVIDIA rally from last week, right? And we're bang on it, right? We went right down to it. This is on the ES, went right the way down to it. It's basically at 50.60. And if we go and take a look on the NASDAQ, same thing. We went down to it, bounced off it, went pips below it in here, and that is at 17,850. We're 847, and we bounced off of that. Look at these trend lines. I think if we get above these trend lines, these counter trend lines coming down off the top, if we can get back above there, then I think there's real risk sprinting to the upside. These are what I'll be using as triggers for entries for us going to the top side. If we break below the current lows, then all the risk is down. And it's going to be triggered by the data, right? Either up through these trend lines or down through the retracement and the lows on both the NASDAQ and the ES. That'll be how I'll be playing it going into today. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trade. Oh, I want to say one other thing, sorry, while I'm on. So I know yesterday, was it yesterday? I think it was yesterday. Yeah, it was yesterday. I spoke about, the webinars and people not coming on the webinars. I'd just like to say we had a lot of very, 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 very positive feedback in here. I really do appreciate that. I do appreciate all you guys come on live. I think we drilled down into some of the data. I think there's a lot more people watch this on the recordings. So if you're watching on the recording, thank you for sending your messages as well. Those guys who watch on the recordings as well. So, we're not going to do, there's no chance of us doing away with these. I never felt we would do, but we got towards on the live, we got down to some very, very low numbers. And if the numbers are very, very low, then it can be kind of disappointing. But, we've taken a look at the data. A lot of people watching on the recordings, a lot of people watching on YouTube as well. So, we don't post it every day because we don't want to give it away for free, so I don't post every day on YouTube, but we do post onto YouTube as well every now and then to sort of promote Trade Day. And there was a lot of positive feedback. People really do find these webinars useful. So 100% we will be continuing those webinars, and there's no plan to discontinue them. So thank you for your feedback, those who sent it through. That's it, really. I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you for the end of the week TGI Friday Bull versus Bear webinar.